on stage with you. My name is Charles Ziosi. I work for Invest Hong Kong. I'm the head of Fintech. I lead a team in Hong Kong, London, and San Francisco, engaging with best practitioners in Fintech in many different verticals and bring them to Hong Kong to grow the ecosystem. This afternoon, I'm really happy to talk and host great panels of competitors, but friends as well. I find out they are all competitors on paper, but they've got so much to exchange next to the stage and talk about the industry overall. So we've got, I will spend a few minutes to introduce myself. I did a little bit of research. You complemented with a few input as well. I'll start with Megan Caywood. You're originally from the US. You're the co-founder and chief platform officer at Starling Bank, which is based in the UK. You were born in the US. You study in California, and you also completed a cognitive science research at Yale University and Stanford. You got your first PC computer at the age of 16. It was an Apple Mac laptop. But your first computer was at 5 years old, so you were very early in the tech, and that's great to hear. Before joining Starling, you worked at Xero, and you were also basically named by Forbes as 30 under 30 Europe 2018 list, so congratulations for that.
Well, that's a round of applause. Come on, that's a recent.
Yes. I agree with that.
I just wish I was still under 30, let alone on the Forbes.
Well, you're 31, so it's. We will try to do it the 40 under 40. You like to spend some time with everyone at the office. So I ask a few of you, every one of you, which people at your office you like to spend time with the most. Do you like to spend time with the tech people, or the compliance people, or the accounting? And you're very nice with everyone, and you like to spend time with everyone at the office. This is the first time in Hong Kong, so welcome to Hong Kong, and we're going to keep kicking off the panel later on. Our second guest is also coming from the UK, but is also a Hong Kong friend from the family. Jakub is head of international expansion at Revolut. Revolut is a challenger bank from the UK as well. You were born in Krakow, in Poland. You are still in the competition for 30 under 30, so good luck to you if you apply.
2 more years to go.
You study finance. Your first PC was a Compaq. Anyone remember Compaq PC?
Yeah, very long time ago.
Yeah. We are too old to remember.
Mine was a Texas Instrument, so I don't know what.
And you were 10 years old for your first computer. You were hired, Jakub, by Rocket Internet for the Lazada business back in 2013, and you left just before Alibaba bought the company for $1 billion+. We talk about timing later on. And now today you join Revolut as the head of business expansion for Asia. So you spend your time between Hong Kong, Singapore, and some other destination. You will let us more about this. Your favorite app on your mobile phone is actually Revolut.
Revolut.
That's a surprise. Yes. You spend a lot of time on Slack as well, I guess, for the job, and Facebook every day. Your favorite place in Hong Kong when it comes to eating steaks is Gaucho. I have never been there.
Yeah.
Gaucho.
Steak place?
Very close to LKF. Recommended. Okay. They don't pay me for that recommendation, but they're very good.
Okay. Excellent. And our guest, the next guest is David. David, you're part of the Hong Kong family. You've been in Hong Kong for a long time. You're the CEO and co-founder of NEAT. You study in Switzerland and as well as at the London School of Economics. You got your first PC at the age of 14. And it was which brand?
Commodore Amiga.
Commodore Amiga. Who remembers?
Yeah, I had Amiga 500, Amiga 1200. Good machine.
Okay, so early on the tech, you're also a qualified ski instructor.
That's right.
So that's super useful in fintech to
and in Hong Kong especially.
Slalom between the regulations and everything. You were the youngest MD at Citibank Asia. You're also a RO in Hong Kong, which stands for Responsible Officer. Your 3 favorite apps are Neat, of course. Again, a surprise, WhatsApp, and Slack. And your favorite place in Hong Kong for coffee or lunch?
There's too many, but one of them could be 208.
208. Yeah. Okay, cool, excellent. And James Lloyd, the one and only James Lloyd. So you're the fintech lead for APAC at Ernst & Young. You've got a very, I would say, sweet teeth for payment and banking. What was your first computer?
Texas Instruments, but I'm trying to think of the
That's a calculator,
model.
It's not a computer.
Huh?
Texas Instruments are calculators.
No, the computer actually. So I had a couple of games, and you could kind of pre-program the games. One was called Tombstone City, which anyone over the age of, like, I don't know, 35, 40 would know. Tombstone City was.
And very quickly, what brings you to fintech in your career?
So, I mean, look, I started at sorry, by the way, I forgot to answer any of the questions in the email, hence Charles doesn't have any info. I started at consulting. I moved to a payments company. We did pretty well with that in Europe. That got acquired by Global Payments, which is a big payments company. I moved to Hong Kong, co-founded an alternative finance company, which kind of did okay. The last 2 years, I've been with EY running the Asia Pacific FinTech team, which is basically working with, well, some of the folks on the stage, in fact, early stage, growth stage, non-traditional financial services players, both to help them as they scale, and then equally to help some of our incumbent clients as they seek to work with or invest in.
Your 3 favorite apps on your mobile phone?
Gosh, well, I'm not on Facebook, so WhatsApp, definitely number 1. I guess WeChat, because I cover China, and you can't cover China without WeChat. Third app? Twitter. Yeah, I'm a whore on Twitter.
Best coffee in Hong Kong?
I don't drink coffee.
Oh, yes. Best tea in Hong Kong?
I mean, tea's tea, right? I drink a lot of tea, but tea is tea.
Excellent. Guys, is there
Best Guinness in Hong Kong? That's actually also a hard question because there's not a lot of good Guinness in Hong Kong. But if anyone finds some, please tell me. 6 years later, I'm still looking.
Okay. We'll investigate that. Is there a definition for challenger banks? So the topic of our panel is challenger banks. And is there a definition you will be able to agree all together? Is there a definition for a challenger bank in the UK? Do you think we're going to get challenger banks in some of the countries where there is very poor banking infrastructure per today? Who is brave enough to start with the definition of a challenger bank?
I could give it a stab. So the difficulty with the term challenger bank is that there's so many different types. So there are some which are in the retail space, so like Starling, who's actually getting the banking license, building the bank from scratch, and launching a customer-facing account. There are others who are more of an infrastructure bank, so that would be like ClearBank, who their main focus is to plug into the payment scheme so you have B2B access, which only traditional banks could previously do. And then there are those who really focus on the user experience, the front-end side of the development, but they're not actually a bank. So they've built on top of someone like Wirecard or Bancorp. That would be someone more akin to Monzo when they first started out, or Revolut, or some of the others. But they don't actually have the banking license, but they're really looking to improve people's financial lives by giving them an easier way to manage their finances, more insights into their spending. So it's difficult to nail just one singular definition because there's multiple types, I would say.
Is there financial banks, challenger banks, potentials only in the mature market, or we're going to see basically a leapfrog and a normal bank in a developing market will be what is a challenger bank in the mature market?
Right now, we're seeing them, I would say, kind of pop up all over. Part of it, the reason why we're seeing so much growth is because the governments have actively been working to make it easier for new banks to be started. You see that in the UK in particular, but now you're seeing it in Australia and Hong Kong and other areas as well, where they're really looking to help facilitate this type of competition innovation. So right now you're seeing it in very mature markets such as the UK, but I expect we'll see this starting to expand globally. One, as these challenger banks begin to expand into additional markets, but two, as the additional regulators around the world are really beginning to embrace it.
Yeah, I mean, actually on that, I don't think it's any coincidence, frankly, that challenger banks have been perhaps most advanced and most associated with the UK. I mean, just putting a bit of context behind it, I mean, the UK banking system effectively had to be bailed out after the crisis, apart from, you know, in particular, their biggest bank, which happens to be largely an Asian bank, even if they don't say so. So as a consequence, the regulatory environment was very different in the UK. I mean, they reformulated the regulators, of course, the creation of Financial Conduct Authority, Competition and Market Authority, and so on and so forth came in. And they had a certain period in which they could say, actually, this banking infrastructure needs to be modernized. We need to create much more competition, both traditional and non-traditional players. So the regulators in the UK have been extremely proactive in this space. And a consequence, one of the consequences of which has been the emergence of some of these players. That's not necessarily the case in other markets, particularly out here in much of Asia, where A, we weren't as impacted, frankly, at a retail banking system from the global financial crisis. And as a consequence, I would say the regulators haven't been, you know, there hasn't been the same energy behind creating non-traditional competition. I mean, mainland China is an exception, but that's for different reasons, which we can get into. But I think ultimately, even now in Hong Kong, Singapore, Australia, other markets, we are seeing this kind of growing regulatory drive behind, at a minimum, improving incumbent propositions. And quite honestly, the best way to do that is to introduce some level of competition into the market. So I think, to some degree, we're following the UK lead.
So the regulators are the catalyst of this market of challenger banks?
Almost by definition, because to be a bank, and this is, I think, to Megan's point earlier, I mean, there's a roadmap, there's a bunch of different stages that you would need to work through. I mean, you can become a stored value facility or store of value, but then if you want to take deposits and if you want to, make payments, corporate payments, et cetera. So there's a kind of something of a roadmap you could work through. But ultimately, if you want to take consumer deposits, frankly, you're going to need to have some form of banking license. In most markets, such as Hong Kong, there is just one banking license. There is a stored value facility license, which David can speak to, but there is one banking license. So I think in the UK, they've introduced these kind of intermediary stages of licensing. I haven't really seen that in other markets. Would be kind of interested to see how that plays out. But here in Hong Kong, at least, there's one banking license. They're currently in the process of considering options and flexibility around authorization of virtual banks, which is challenger banks, effectively.
So what type of license do you guys have? David, what kind of license? We're going to just have a quick tour of the panel to see how you operate and what is basically the setup of everyone. Do you own a banking license in Hong Kong?
No, we don't. We chose an alternative way to go to market, which is to partner with a licensed entity.
Okay.
The licensed entity has an SVF license, which is the stored value facility that James just mentioned. It's just faster. And as a startup, I think one of the key ingredients is to validate your hypothesis really, really fast. Do you have product market fit, yes or no? And to us, that was the hack, if you will, to go to market. A lot of dialogue with the regulator, a lot of dialogue with the partners. You need to find the right partners as well to do it. And in many ways, this has been done around the world, right? I mean, the other end of the team here, we have a similar model. At least you began with that, right?
Any license in the US?
Yes, so if I can just add on this, it really depends for Revolut from market to market. So essentially, we started in UK as an e-money license holder, which is not a bank compared to, for example, Monzo or compared to Starling right now. But we're working with tier 1 banks in the UK to perform our operations. But while we're expanding right now, we are basically looking at the most efficient way to do it. We don't want to become a bank outside of Europe. We have applied for a European banking license. So you can see that at one step at a time. We try to get into the market. We want to do it as soon as possible, but later on we are optimizing for efficiency. In Europe, getting that European banking license is the next step after we already acquired more than 1 million clients. Right now, if we are going to the US, we are going to operate in a similar model to what we have been doing before, right? In Asia, we are going to actually be, in Singapore, for example, we're going to be holding the SVF license ourselves, the remittance license ourselves, and we're going to be a direct member of the card schemes. So we are playing around. It's just the matter of, it's very hard to say, look, this is the one way we're operating. As a bigger company, what we're doing is we're saying, look, we're entering this many markets. This is the best and most efficient way to do it. If we want to become a bank, for example, in Brazil, it will take us ages. Or let's say, if we want to enter as a bank in Russia, it's the same thing. That's why we're trying to, do a proper research and homework before we go, and then see what's the best way for us.
And you market yourself as a bank?
That's the thing. We are not a bank. We don't. Many times we are being put into this position of being a challenger bank or the new banks, etc. When we start holding the banking license, I think it will make sense. For now, we are, the banking term is so broad that everything that is basically coming under the banking services can be said it's challenger bank.
Does your customer care?
But actually, by the way, on that point, a kind of vaguely amusing side note, I mean, this Next Money conference that Rob and team run used to be called Next Bank. For those of us who have been involved in a few years,
exactly.
You cannot have a company in Hong Kong with bank in the title and not be licensed as a bank. That includes a blood bank, for example, includes anything. So actually the marketing is extremely important because if we're being honest, I mean, a lot of the fintech opportunity, frankly, in all of these markets is around kind of quasi, regulatory arbitrage. So the idea that you can offer kind of bank-like services without necessarily being, licensed as a bank. So it's kind of important to understand the marketing definitions and the liabilities associated with that as well. And I think that probably impacts all of these businesses.
It's also a protected word in the UK, so you can't actually legally refer to yourself as a bank unless you have a banking license.
Yeah.
So they couldn't have revolutbank.com, that would be illegal. But with that, I would say that there's a few different nuances to it. So with Starling, we received our full banking license, which means that we can hold customer deposits, we can give them FSCS protection, which means you insure the funds up to £85,000, plug in directly to the payment schemes, and do the things that you would expect a traditional bank to do in terms of the abilities. But additionally, because we didn't build ourselves on top of someone else's system, so we didn't have a prepaid card offering, we actually built the back-end technology, we got the banking license. That meant we could additionally directly connect to the payment schemes, so faster payments and backs. So now if you have a fintech from abroad globally that wants to come into the UK to access those schemes, there's only 13 members of faster payments, with Starling being, well, I think there's 14 now, but we're the 13th member of it. And so to offer payment services of B2B function, one, is a huge revenue stream, which is great, but two, if you build on top of someone else's platform like Wirecard, like Monzo has stated that their costs per month are £2 million, but they have no revenue. So it's huge cost with a little revenue to begin with, so you're testing product market fit, but you had a very, very high cost, which means you have to raise even more capital. Because now once you become a licensed bank, you have to insure that capital with deposits. So you have to hold a lot of capital to meet your regulatory requirements. So we did that, but we additionally, as I'd mentioned earlier, for those that are familiar, we have a marketplace. So we have the full banking license, we offer the retail current account, we have the payment services division, but we also have an entirely different set of regulatory requirements we just received last year, and that's in order to introduce our customers to all of the other types of services like mortgages, insurance, savings and management. But
so this is open banking activities for you.
Yeah, it enables opportunities, because if you don't have the license, then you're not able to perform certain activities.
Okay, and these open API things, we have this topic coming up in Hong Kong. The HKMA has been opening a kind of a stream within the sandbox on open API. We know it's gonna come up here in Hong Kong and at some point in time. How is it moving forward in the UK behind the communications, the PR and everything? What is the reality behind? You seem very active. How is the incumbent and how the market is really moving forward? There was an article a few days ago that actually some of the banks are not exactly on time, and maybe we're not sure if they, how the delay is happening. Is it really a technical delay, or it's a commercial delay? Give us what's happening over there.
Yeah, so it's a very hot topic. Everyone currently is very much discussing it. So APIs have fundamentally changed the way that software is created and brought to market in technology, and now that's being mandated for banks. So banks used to have this view that they own the customer data, and so they'd incentivize you to join with a current account, but then they would upsell you all the higher profit financial products, and that's how they made money. But now, basically what the government has said is they don't have to compete hard enough for customers' business. They're not giving good prices or having great products. So they've said you no longer own that customer data. The customers own their own data. So what that means, though, is it's not only a technology shift, it's a business model shift. So their current way of making money by upselling higher profit financial products is disintegrating. But if they're reduced down to just the core current account, for Starling, that's profitable because we don't have any branch locations. We're mobile only. We have this B2B payment services business as well, and we, lend money out and take interest on deposits. And for us, that gets us to profitability quite well. But for a traditional bank who has 100,000 employees and all these, branch locations with physical infrastructure, it just doesn't make sense. So they're afraid of being reduced to the infrastructure. So as you can imagine, they had this deadline of 13th January, and most of them, the majority of them, have missed it. So in the UK, what that meant is they mandated instead that they have some interim way to access the data, which the only way is screen scraping. And that's an incredibly insecure and inefficient way of sharing data because it requires the user to give their logon credentials to the third party who then sweeps all of their data. So it's not great. But then they have to eventually also provide all of the additional payments products from PSD2.
We are working on this topic in Hong Kong. Do you have any recommendations for our regulators?
Well, let me interject, because I think there's the difference between open banking in the UK, frankly, and open APIs in the Hong Kong, Singaporean context. I mean, they're literally worlds apart. I mean, what we're talking about here is a regulatory mandate wherein the banks need to open up services to third parties at the customer's behest. In Hong Kong and Singapore, at least from what we understand in terms of the initial consultation, it's more about, hey, can the industry come together to perhaps standardize some of the API requests that will be out there? So there's no actual regulatory mandate. I mean, there may be, some enforced standardization, although I suspect it won't occur. But certainly we don't have any anticipation of open banking regime in Asia, with the exception of Australia, which is certainly going to move in that direction, likely from July of this year. And then Japan, there's kind of iterations toward it as well.
So how do you think this open API initiative from the HKMA will enable some business or some opportunities for startups? If there is no regulatory pressure behind, just you open the pipe, but you don't have to fill in the pipe?
Well, no, I mean, look, I think it's mutually beneficial insofar as, many of the banks need to clean up their kind of basic infrastructure and how they actually connect internally and then also with third parties. And I do think we're seeing in all markets a consequence of companies like these, incumbents, at least forward-thinking banks beginning to do more genuine, I don't know if we'd call it partnerships, but service relationships with earlier stage and smaller parties. So having a standardized way of doing that, I think, would be beneficial from a cost and risk perspective. For the startups themselves, I mean, in a basic sense, having to code to 5 different, legacy banks is, suboptimal. So, I mean, I think it's generally a good thing, but I would just caution against this idea that we're going to see a replication of what happened in the UK and other markets. As I said, ex-Australia, it's highly unlikely.
Yeah, just one thing to add on this. I think, as James mentioned, it's not going to be replicated one-on-one instantaneously. But as you can already see, for example, what MAS is doing with the SVF licensing, changing them a lot to how the e-money license is looking at in UK. This might not be, you can see the shift is that they're looking at what's going on, right? They want to standardize and harmonize it later on, moving forward. But the whole idea is that it will take time, and it should be seen as a best practice rather than as an enforcement in different governments or different regulatories.
So if virtual banks license happen to be available in Hong Kong and there is some buzz in the media, would you apply for such license? Is it something you need for your business? How actually you find out your customers and your service offer is kind of flying right?
So look, I mean, becoming a bank is the holy grail, right, in the finance world. There are several headwinds, I think, in getting there realistically within the next 12 to 18 months in a place like Hong Kong. Chief of which is the fact that there is a minimum capital requirement of 300 million Hong Kong dollars here in Hong Kong for a bank. That is law. It's in the banking ordinance. If it needs to be changed, and however much the industry, particularly the startups clearly, but also the regulator, the HKMA, would like to see it changed, that needs to go through LegCo.
Exactly.
And you know what that means,
yeah.
right? So there are many hurdles. So realistically, right now, it would be a nice to have, if I'm honest, because you're going to be keeping your feet on the ground. But you don't need that to go to market. You, as we were hearing before, challenger banks could be in many different niches. And the point is, be in the niche where you really solve that pain point and grow out of that. You don't need to do current accounts, insurance, mortgages, everything, right? At least that's what I believe.
I would like to dive with you guys. I think there is one thing I'm sure the audience will be very curious. You are building brands, you are acquiring customers, you are doing marketing, and it's basically a race for customer acquisition at the best cost and trying to get an ROI on your customer acquisition. What works better? How do you get people to open accounts with you? What is the psychology of customers behind signing up on one of your services, and what did you learn in this process, and what do you think we are missing into the customer acquisition phase?
As the non-bank here, can I jump in? Because I'm conflicted. We actually are, I think, the first provider who's pushing a company through the new virtual banking authorization process, so we're pretty heavily engaged in that. But the reason I jump in on that basis is I think let's distinguish between acquiring customers at any cost and acquiring profitable customers in the medium term.
This is where I want to go, yeah?
Yeah, because I think that, I mean, the nature of banking, I mean, fintech, okay, great, all this hype. The reality is there's only still a limited amount of ways you make money. Mm-hmm. You might make it on float, on CASA or something. You might make it on net interest rate. I mean, there's a bunch of different ways, but it's still somewhat limited irrespective of what technology you're using. So I think that's probably the drive on this roadmap towards ultimately taking customer accounts and lending it out at a better rate.
So what is the target? What is the best customers? And what did you learn in the process of acquiring customers?
So I think a lot of people, when they ask about marketing, they want to hear like a silver bullet that's easily replicable, something that anyone can use, like, oh, you do this particular type of SEO marketing and it works really well. But the truth of the matter is it's word of mouth recommendation. It's people who use your app who see the benefit of it and they recommend it to their friends and family. That tends to be, for us, our highest driver of app download. So typically, for anyone here, you're all probably familiar with the NPS score and measuring that to see how many people are actually recommending your app. But it's very true, and particularly in financial services. And the thing that for us that we find is the root of why people recommend is that whenever we've taken something that was previously incredibly painful, like from a traditional bank, and made it really easy. So signing up for an account, sending payments, we don't have any fees. So if you go abroad and you use an ATM and that bank charges you a fee, like we pay it on your behalf. So you continuously have no fees. Really low or like interest rates on overdraft, things like that. But you take something that was painful, either a process or price, and you make it incredibly easy or simple and delightful. And that's a thing that usually is like, okay, now I'm going to recommend this to my friends. And it's that typically is the highest driver of adoption, particularly I'd say within banking where people look for recommendations from others for it.
It was the same for you?
So that's a great question because at Revolut we got, 1.4 million clients without spending a single penny on marketing, right? So what we've done is, as Megan suggested, is we are really, really tech and product driven. Almost half of our employees right now are developers. So the way that we see it is that when you build a great product, and for us, first of all, we solved the pain of banking before, but what we also did is we save people money. So what Revolut essentially is that when you go abroad, you spend money with your card for free at interbank rate, you send money for free. So basically democratizing finance and allowing people to move money around for at a fraction of cost of what it was. So basically following up on Megan, we just start looking into stuff like SEM, SEO, paid ads. The first, as I said, 1.4 million clients, everything organic, word of mouth. And when you see a product that literally solves your problem or saves your money, especially for the targeted audience that we are aiming at, people just recommend it, At the same time, we also input some tools and some tweaks on the product that allow other people to refer, right? So for example, in UK, what we've done is that a lot of spike on user acquisition was because of cryptocurrency. So we allowed people to basically play on the price of Bitcoin, Litecoin, Ethereum. And then later on, if you would like to get access to this, you would have to invite 3 other friends or go on the premium account, right? So on one side, it boosted our premium account activity. On the other side, people that were really, and crypto was a extremely hot topic in Europe and still is everywhere. But if you wanted to get access to this, you had to refer 3 friends, right? So our customer acquisition cost is 0, almost 0. And this is the way that we also see ourselves growing.
So UX is the way to acquire customers. A good UX, a good product, a good experience for the customer brings business.
Yeah.
Okay. So
well, it helps to have a existing anchor use case. So this is an obvious point perhaps, but I mean, talking my own book for a second, we were fortunate to be involved in the design, development, deployment of Kakao Bank in Korea, which is now, pretty successful. They launched in July last year. They've now got 5 million customers. The reality is they had an existing messaging service with 38 million customers. Yeah. So I do think, and by the way, that's going to happen here in the next kind of 8-12 months in a different form. It's going to happen in other markets of which people are interested in. We're going to see big players in, of course, the technology space, but things like messaging, on-demand services, anything really where you've got a pretty high level of customer engagement. I think it's natural in many of these markets to see them begin to transition more and more into financial services, almost certainly through the gateway drug that is peer-to-peer payments or merchant acceptance. But yeah, I mean, I would expect that a lot of the banks that we're talking about in 2 or 3 years' time today don't even identify as banks.
What is the future of all you guys, challenger banks? Very provocative questions. Are you all designing a company to be sold or to be acquired by a big banks later on? Do you think some of the challenger banks will be able to ride their own journey and survive and build up their own ecosystem, or you think the history is kind of written and in 2-3 years' time some giants will just acquire you? Should it be an American bank wanted to go in Asia or whatever directions? Who is for sale? No.
I think the nature of the markets will be such that naturally category leaders will emerge. There will also be some merging and consolidation. We've seen a ton of people applying for banking licenses in the UK, a number of challenger banks starting up across the world. There might be some consolidation or acquisitions there. There will be others at Starling. I know we very much have this vision of not just exiting. We very much want to develop the world's best current account, so have this vision of globally scaling our product and really not looking for an exit in particular. But I do think across the market, you'll see a number of exits, you'll see mergers, you'll see some simply fading away, which will naturally happen as well.
David, any thoughts on that?
Okay, I think there will be consolidation in the market, particularly if you look in the European market. I personally think too many players. The trend has been that incumbents, as in banks, typically take out neobanks. That's been really the trend in the US and Europe as well. simply because that's where the wallet and also the threat was, right? But as we're hearing from James, this is changing, right? You have pure tech companies with extremely deep pockets. Those could be exits. And then I think actually some of us will become major players that may remain forever, right?
For us, we're in a position that when it comes to, so I agree with everything you guys said about the consolidation on the market, etc. We don't, I hope from a Revolut perspective, we're not going to be going the way that some other UK players went, that they got acquired by a bigger bank, because essentially, in essence, what we're trying to do is we're on the other side. There's banks on one side that, of course, we're working together, but we're building something that we truly believe that it's changing the way that people bank, right? So I hope it's not going to be a strategy for us to get acquired. I know that Facebook and Google are looking into banking also, so this is something that we have in mind. But we try to focus on other things. Instead of going 3 steps ahead and focusing, or what is our exit plan, do we want to get acquired, etc., we really want to make sure that we are acquiring good customers, we're providing a lot of value to them, and we're developing a product that is solving their problems, right? So we try to focus on things that we can basically feel and have impact on, rather than go 3 steps ahead and thinking about, okay, we're doing this great thing, we're already valued at almost a unicorn level, what is our exit plan? And I hope our CEO or our management board has the same approach, is that, of course, it's great for them to cash out, but we're building something bigger. We're building literally the future of moving money globally.
Thank you so much for your time, guys. Jakub, James, Megan, David, thank you so much for these thoughts on the challenger banks. And I guess you will be around if some people want to catch up with you or get a few questions. Thank you again. Thank you.